TGIF Warriors. How's everyone doing? AJ, thank you. Michael, RC, AJ, Bran. Okay, thank you. And Brian, how are you? Happy Friday to you, buddy. James, Hugo, Blake's around, of course, and Bran. Okay, so let's go to work. It's Friday, and had some interesting. You guys see the speech from Davos from President Trump?
Of course.
Okay,
How could we miss that?
so let me ask you, Blake, um, do you think that we're going to have a war between the Fed and the presidency? You know how it didn't last. The peace deal didn't last very long. Demanding rates are going to go down. This was a trade of the week. Okay, and I think shorting the dollar, pick your poison. These are all weeklies. Euro got a breakout out of the wedge. Cable, 2 week
Yeah, and
reversal.
and and one of the things that really kickstarted it was last night, though, Dale. Last
The
night,
yen. Okay, the yen.
no. Last night, basically, Trump said he had a conversation with Xi, and he really doesn't want to do tariffs on China. If he can, basically saying if I can avoid doing putting new tariffs on China, then then I don't want to. And that allowed for the Aussie dollar to scramble above 63 cents and break out. And the fact of the matter is, I'll say this and I'll let you continue on, is
All right.
that Trump's really, after having a conversation with Xi, he's trying to put together some sort of deal to where he doesn't have to tariff them because the holder of the most and this is something we talked about on our private shows over the last week, because he had a conversation with him before he was inaugurated, that that China holds a lot, if not is the largest holder of US debt. And if they continue to sell treasuries, yields are going to scream higher. They don't want a stronger dollar. They want a weaker dollar. They don't want yields where they're at right now. They need them to come down. So I have a feeling that Trump and China and Xi are really just talking this out and trying to figure out what the best way forward is, and probably is at the negotiating table, and really doesn't want to do tariffs because China will just say, well, F you, man. We're going to just continue to sell your debt, and we are going to continue to drive rates higher. And you got to service that. So good luck. You know what I mean?
They're going to do that anyway, Blake. And if you believe that he's not going to put tariffs on China, I would fade that. That may be what he's saying now, but he's so mercurial that I think that we have to, take what he says with a grain of salt because the story changes all the time.
It does.
Okay.
He's flip-flopped three different times
So
every
why won't,
evening.
yeah.
All yeah, yeah.
So I don't think there's going to be peace and tranquility with China. And anyway, China's going to push their advantage, and that's their one advantage. I think Japan owns more, but all I know is that if you were a world leader or in worked for a central bank elsewhere in the world and you heard that kind of talk, would that give you confidence? Maybe that's intentional to bring the dollar down. That's what he wants. But
Yeah.
would you have confidence in the US after hearing that speech? You might be
Uh,
intimidated, but would you have confidence?
yeah, I don't know. I mean,
Yeah,
I
I
don't
don't
know.
either. I don't know. I mean, it's like what we did with Russia, understandable about weaponizing um, our currency and what we have going on with the reserve currency. Trump is weaponizing the whole economy. Okay. So it's a war now with the economy. It was just with the reserve currency and freezing assets. This is freezing people, nations out, and unless they come in here and manufacture here. So
See, oh, go
it's
ahead.
weaponized. Anyway, I just think it's
He is.
weaponized.
He is, but one thing I actually have watched a few different interviews and actually and read just recently read some data and then we can continue on because there's a lot of shit to talk about today.
Yeah, there is.
Regarding China, where we're at today, or excuse me, where China's at today
Yeah,
is a lot different than where China was at, in
4 years ago.
2016, 2017.
Yeah,
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 like 8 years ago or
yeah,
10 years ago. Um, and China is a lot less dependent on the US than they used to be. There's a lot of Chinese goods in emerging markets now in Europe and a lot of different places. The US has become less of a major trading partner to China over the last several years.
yeah,
So I don't I think we have a little bit. We still have Trump still has a big stick to yield and to wield, but I think it's not as big as it once was with China. So but China also the economy is a little bit it's slowed down quite a bit as they've tried to shift from such an
yeah.
exporting economy to more of a consuming economy, which they've done a really fantastic job over the last 20 years doing that. But it's also, as a result, it's slowed down China's economy quite a bit, and there's a lot of population issues and a lot
Yeah.
of
Well, you
demographic
know what?
stuff that
Maybe
people need to pay
maybe
attention
Xi will
to.
lose. Xi will lose the next election then,
Me,
which there
maybe.
aren't any. Which there really aren't any. What's the point? Okay.
Well, yeah, just
They
like Putin's elections too,
right.
right?
That's what I'm saying. So
Yeah.
he doesn't have to worry about it. He's not up for election in 4 years.
Yeah,
Maybe a symbolic vote, but that's it.
fascinating. It's going to be a fascinating development. You know what's going to be most, fascinating, Dale, is the freaking volatility that we've seen over and I tweeted about this last night. Personally, I was just like, if the last few days are indicative of what we're going to get for 2025, or for the next 4 years. It is going to be mayhem, and it continues to be. And the opportunities are abound in the market. So if you guys aren't leveraging up, with you're not trading specifically like in your specific trades, but leveraging up the ability with like the trader funding program, being in, Forex Analytix, being in our trading community, talking about everything that's moving, having communities to do that, being able to, utilize somebody else's money. Check out the trader funding program. You guys have to just check it out because this is the time you take advantage of this situation when volatility is rampant. Anyway, I'm going to let you continue on. So,
Okay,
yeah,
that's always fine, Blake.
yeah.
And I'll go to Ryan now. How are you today, TGIF, Ryan?
Hey, mate, how's it going?
Pretty good. So it turned out to be, like we talked earlier in the week, a sell the rumor, buy the fact on BOJ action yesterday.
Yeah, or buy the room on the end, sell the fact, yeah, whichever way you want
Yeah,
to call it.
yeah,
But you might get your 157 today.
yeah. You know what? I'm starting to reassess,
Yeah,
and if we get through 57, I'm thinking that there's a possibility that the yen can make one more new high. What do you think?
yeah, I think it's got every chance. I think it's got
Yeah,
every chance.
like
Yeah,
maybe towards 59-ish or something like that. Maybe 80, 100 pips above the last high.
could do. Because we're going to flip pretty quickly from Trump stuff that we've been trading the last 2 weeks to Fed stuff and all the other central banks next week.
What an
And
interesting so give me your take on what's going to happen here between Powell and Trump.
What you got to do is have Truth Social open because when the Fed pause next week, after Trump said he's going to get
Yeah,
rates down,
yeah,
he's going to be on the scene pretty
yeah.
quickly after the Fed to give his
He,
chapter and verse.
I heard he can't fire him. It's illegal.
Yeah, he can't fire him, and he said he wasn't going to fire him last time. He talked about it, but
Right.
I think he got told he couldn't do it. So
Right.
in the end, he said he was happy with Powell. But so he's not.
Uh-huh.
He might talk the same language, and Powell's doing a crap job, and he needs to get rates down in his own way. Powell's just going to go give it a big fat bothered. So
Yeah.
but he will. I'll put my house on him coming out 5 minutes after the Fed if they go on hold and having a little rant.
Is that what you're expecting? That's what the market's expecting? Fed on hold next week?
We're looking for a pause pretty much.
Yeah.
And the question is going to be how long that pause is going to be. Is the Fed going to give a strong signal that they're in control of this, or are they going to go, well, we might pause for a month, or if inflation starts pulling back again, we'll start cutting again, or if it goes higher, we might start hiking again. These early central bank meetings that we get at the start of the year, they often set up what happens for the rest of the year.
Well, kind of like the market gives an indication for the year by what happens in January.
Yeah.
First, I don't know, some people will use a week, the first week, and each day represents something like, I don't know, a quarter, I'm not sure. Okay, so going into next week, you convinced about this dollar top here?
Yes and no. Yes and no. I think we get a good idea next week, as I say, with the Fed. If they're more hawkish than the market expects, if there's any hint that rates are going to stay on pause for an extended period, and there's even a possibility of a hike, then I think we're going to at least go and have a look at those highs again.
The highs in the dollar? Okay.
Yeah.
All right.
I'll rule out 109s. Maybe that 109.50 is a push, but 109 perhaps.
Okay. All right. And anything else you're looking at? Did you end up buying the breakout in the S&Ps over 6,100? You were talking about that a long time ago. Okay.
Yeah, I'm long at the moment.
Okay. How did I remember that? How did I remember?
You are the market elephant in a polite way. The memory of an elephant.
All right. All right. So now you have BE stops in and letting it run.
No, my stops are still below the level because it was a bit of it wasn't the best break because it came literally bang on the close yesterday.
Yeah.
Which is, not the sort of thing you want to see because you don't really get a chance to see what the market's doing from that point. Because I'm trading it based off the cash break of 61 rather than the CFD. So I've had to do a little bit of jiggling on my, where I enter because my CFDs are based on future cash, this, that, and the other. So it's a different rate. But
got it. All right.
Yeah. Well,
so
I'm going to be watching that open closely, I'll tell you.
Yeah, so the Dow retraced a little bit more than 78.6. Russell still is bringing up the rear. Look where it's stalling here, right at this 230 level. And I see two drives. So just something to keep in mind going into, I know there's no reason to be bearish S&Ps, but I'm looking for chinks in the armor. Let's see what happens with the Mag 7s. I went back into puts this week on what's the name of that? NVIDIA. They say I mispronounce it. Well, I don't care if I mispronounce it, maybe as long as I'm right. Anyway, this
What about your euro?
What about the euro?
Yeah, what about your euro?
I'd stay long. And move your stops up, there's nothing wrong with partials. We were talking about it here.
Long and strong, Dale. Long and strong.
Yeah. So, I'd be worried about, you could at least trail it to 103.50 if you bought it in here. I don't think we should take out 103.50. Okay. That's going to be it was an important area. It's still an important area. But I think we're on our way to 106. I mean, if you believe in wedges, right? And Edwards and McGee says that wedges can retrace 100%. Okay, so 100% of this wedge is way up there, 112. I know it sounds ridiculous right now, but that's a technical definition of a wedge. You don't look. There'll be stops along the way. Maybe we're getting one here, but I can't be short euro. I can't be short cable. You know, cable's the one thing that maybe it's still weaker than the euro, and the Aussie's even a little weaker. Look at this. I just
you talk
noticed this.
about cable. You want to talk about cable? Your boy Steve, who happens to be on the show right now. This is his chart of the day.
Okay, all right, and he had another good one the other day. I think it was Euros, Steve or Dixie. Anyway, focused on it
the
was
euro was the
currency.
previous one.
It was a euro. Okay, so Steve, let me ask you this: are you convinced we have a bottom here?
If I'm convinced we have a bottom in the cable.
No, well, here in euro, and I didn't see your chart of the day. Top in the dollar, bottom in euro, or is this a break to buy?
The evidence is piling in that we have some kind of a high in the dollar. It's too premature to call it a major high.
Yeah.
But it's definitely some kind of a high.
Okay. If we take out these lows.
Dale, is your microphone close to your mouth? Because
yeah. Yeah.
Okay.
Can you hear me now? All right.
Yeah, better than before.
Okay, so and cable, you want to give us a preview on your chart of the day?
Sure. We have a descending channel that is currently being tested from the end of September high to now. Yeah, the one you're trying to draw. Yeah.
Right there. Okay.
Yeah.
Nice look.
So, yeah, that's a pivot area, unquestionably. We've been in a multi-month move lower, and we are currently testing this. The euro seems to be one day ahead. The euro was at the same exact juncture yesterday, until yesterday, actually, because today it seems to be breaking higher. Perhaps the cable is just one day behind.
Yeah, maybe EG is due for a pullback, but here's another wedge, right? So, I think we could see 86, but we could get a pullback first. This was a nice move out of the wedge.
Yeah, Euro Pound has had a nice move higher after a long period
grinding.
of scraping the bottom and grinding lower. So it finally showed some momentum to the upside. It has spent the last few days consolidating these gains. There is also an important trend line resistance
up here
that
too.
dates back to 2022 in Euro Pound, which currently passes roughly from 85 cents. So I think we need to see a break above that level to open a lot more upside for the pair.
Okay, from 22. Are you talking about this spike?
Let me see
October 22. I'd say you're probably talking about this because I don't see you anchoring a trend line.
Yeah, you're looking at the weekly, but yes, you can take that point in time you're talking about.
Here? Really? Take it, huh? Okay.
Not that one.
I think it's this one.
So, yeah, you can take that one because if you go down to the daily, you'll see why you can draw it from before, but sure, you can draw it from there if you want.
What a great teacher you are. We could do technical analysis on, because I'm reading your mind anyway. So
that's the key trend line resistance I would be focusing on if we're talking about, longer term development to the upside in the
Euro Pound.
In the Euro Pound. Until then, I mean, this reaction higher is all good and nice, but we haven't yet invalidated, the move lower in a longer term chart, right?
Okay. Metal, Steve, gold almost at new highs here.
Yeah, I mean, unquestionably, metals were both consolidating. I had a triangle for gold, which we broke several days ago. It's now a breath away from all-time highs. What else is there to say there? I mean, the evidence is very clear. Silver was definitely lagging, but it seems to now be breaking through a descending wedge trend line resistance. So although lagging, it also seems to be trying to make the move today. Obviously, silver has been lagging on most time frames. I mean, what is there to say that gold has been going from all-time highs to all-time highs? You know very, very well, Dale, that in the case of silver, we are so far away from the all-time highs.
Yeah. Now, is that bearish or bullish? Does that mean it's got a long runway, or is that inherent of relative weakness?
At some point, I would expect silver to definitely catch up to gold. But I have to say that the king of metals is gold. So when in doubt, I would be following gold.
Okay. Having a decent week in platinum. Palladium's turning up. Buy palladium.
Yeah, although palladium remains the weakest in general, and platinum is also definitely lagging, severely lagging, still severely lagging gold, even silver.
Okay, so here's the gold. We're going to be diverging on some time frames in gold. Do you have a target up here, or is it? Do you have a level?
In gold?
Yeah.
Having to do with gold, what we have to work with from this point forward, since we're going to be entering again, unprecedented levels, new all-time highs. The only things we have to work with will be extensions of the recent pullback. By recent pullback, I mean the pullback we had from the end of October to the middle of November. Those 2 weeks that we had a rather decent move lower. I mean, momentum was definitely there, with 127% of that being at 2860 almost. So that's going to be the next natural target once we break above 2790, which is the all-time high.
Okay, they say timing is everything. I'm bringing in a new guest today, Garrett Goggin. He's a CFA, CMT, founder of the Golden Portfolio. Was up 136% last year. So it'd be nice to talk to Garrett. He did well. There's a big disconnect. Even precious metal bulls hate the miners. So I thought it'd be interesting to have somebody talk about the disconnect.
Since you mentioned that, Dale, I mean, let's take the example of gold, right? Gold is a breath away from all-time highs at the moment. The GDX, on the other hand, is substantially lower from the recent high, right? The recent high was just above 44. The GDX at the moment is roughly at 37.5. So definitely divergences between the miners and precious metals.
Yeah, I'm looking for one more dip. Anyway, I want to turn it over to Blake, because I probably have to get Garrett a link and make sure he's going to show. So I'm turning over the charts to you, buddy.
Great. Let's we have a few things we need to cover today. Well, first of all, we have PMIs coming out later today, and I want to talk to Ryan regarding this, because we had Eurozone, UK PMIs. How did you read the data as far as because it's what pushed the euro above 105 initially? What do you make of this recovery we're seeing in the European PMIs?
Dead cat bounce. Yeah, but maybe some New Year's stuff, because obviously firms closed down. Some firms manufacturing closed down over Christmas, so maybe some backlogs. I think we saw it last year, the early part of the year. We got some green shoots we were all talking about, and they soon dissipated. But these markets or these sectors have been battered for over a year, so there's every chance to see a little bit of a bounce, whether it's if we start getting into seeing growth picking up is another question. So I'm not expecting anything more than a bit of flatlining and a bit of up and down in the numbers.
Okay, well, let's talk about just the euro in general and maybe the dollar in general. I mean, the euro broke above. This is pretty key resistance at the 104.60 level. We're basically back testing it right now. We've come off, since the European hours, we've come off, what is it, about 40 or 50 pips or so. We're coming right into the breakout point, which I think the euro is going to be very well supported at this level. Now, I've heard a lot of people mention this, and this is one of those things that I think we definitely talk about, but one of the things that needs to be discussed is that the dollar positioning right now is very, very, very aggressively long dollars. I mean, that's where the market's at. It's I actually saw a chart on this. Next to the Mag 7, it's the other big position in the market. So, everybody owns stocks, everybody owns the dollar. And so it doesn't surprise me that we're seeing a bit of a squeeze. And I'm not saying that the euro can't eventually go to parity, which a lot of major banks believe, but everybody's positioned that way. So, if you get Trump being a little bit easier on tariffs, less than the market, has priced in going into the election/inauguration. And then you get some PMIs, let's say the US PMIs, they come in maybe not as strong as the market was looking for. We could see a continued squeeze in the euro back towards 106. Wouldn't you agree with that? And the 38% retracement is 105.70s, 80s. You can see it's 105.82 based on what I see here, but it's somewhere up there. What do you think about that, Ryan?
Yeah, well, as I said this week, earlier this week, we're in one of these situations where it stopped going down, it's creeping higher, and it's going to hardly give you a dip to get in, and you come in a few sessions later and we're 150 pips higher, and it's done exactly that. But it needs to work well with the tech. We got back above 103.40, 50. We're holding that. We've got back above, or we've gotten above 104.50, 60. We're trying to hold that. And if it can do that, then it gives it something to build on, because we were doing that all the way down. Breaking support became resistance. Break support became resistance. Now we're doing the opposite. Now we're breaking resistance and it's becoming support. So while that lasts, it will keep going up. But, as I've been saying, when you get to central bank week next week, it could be a different story, because the market's going to forget Trump for 5 minutes and come back to thinking what's going on in the economy, what's going on in the dollar, what's going on with the Fed. And the Fed,
which it's going to be a big central bank meeting week next week.
Yeah.
And exactly. Huge earnings week, by the way. Huge earnings week. I want to just point something out, something we've been discussing every single day on the Morning Edge, which is the show that happens about 45 minutes from now with Steve and I. What you've seen in these dollar pairs is you've seen the euro break out of this descending channel. Sterling, as Steve pointed out in the chart of the day, has just hit channel resistance. Aussie had already broken out of channel. The Kiwi has broken out of the channel this week, just actually over the last couple of days. You've got other pairs like the dollar Swiss, which is approaching channel support. Dollar Canadian has got this megaphone pattern, and if it comes in, in a bullish trend in a megaphone, it's probably going to exit where it came in from. So that's something to be keeping an eye on. And then you have the US dollar Norwegian krona has broken its channel. So you can see the dollar is really starting to make, starting to break down against certain currencies. And I want to point out one last level before we pass it over to Dale. If you look at the dollar index, and one of the, obviously we've been talking about this all week, so you can go over to our bias chart. I didn't upload it yesterday, it was my mistake, but the previous days, 107.35 for the dollar index, that was the low today. Well, basically we went as low as 107.27, but you can see that low. The reason why that's a big deal is that is the highest from back in October of 2023. If that level is broken, that means, you know, you can really, if you want to put it in euro terms, that basically means the euro's back above 105 and maybe closer to the highs of the day. If the euro closes above 105 or near 105, that's a very, very bullish sign. So for the euro, it's obviously a very bearish sign for the dollar, as the dollar index is going to be threatening. Now, remember, if there's the largest positions out there in the markets, Mag 7, dollar, longs, bonds short, you know, short, you know, 10-year, 30-year notes, 10-year notes, 30-year bonds, whatever it is, fixed income. If those are the biggest trades out there and they start to reverse course, you know, what does that mean? And how's that affect what you're doing in the market? So pay really, really close attention. I would say, you know, for the weekly close, because as Dale pointed out, the weekly candle in the dollar index is not pretty right now. So with that being said, I want to make sure you guys, you know, just know this, that we have, you know, we have the trader funding program. It is this type of volatility that we're seeing every single day now. The best way to take advantage of it is, you know, you could get instant funding if you're not in the US. If you want to go that route, or you can take a one-step assessment, very easy rules. We don't have anything complicated. Check out the trader funding program. All right, Dale, I'm going to pass it over to you because I know you have a new guest. Ryan, you've been kicking ass all week without K-Man here. Thanks for holding down the fort. Steve, it's been great having you here every day. We hope that continues. And Dale, thank you for your guidance every single week.
Hey, thank you, Dream Team. Good
Thanks,
job. There weren't a lot of people that got caught long the dollar that were here listening to us. Okay. We did what we're supposed to do. You know, even if they didn't get short the dollar, at least they probably weren't trying to fade it. So, what a great guest I have today. I caught a tweet on X by Garrett, and Garrett, I want to welcome you here to our community on F.A.C.E. We've been at this for about a little over 8 years, and I think I have unmuted you. Okay. And just a little background about Garrett. He's a CFA, CMT, and founder of the Golden Portfolio, and you were up 136% last year. Can I ask you a little bit about your journey, Garrett? You know, let me take you back in time and say you're in your 20s. What attracted you to natural resource stocks or natural resources? What was your first foray in the business?
Yeah, can you guys hear me?
Yeah, got you.
All right, good. So I actually I like watching your broadcast because I used to trade derivative arbitrage in the UK and then in Dublin right at the beginning of electronic trading, 2000, 2001. Right, we were trading electronic contracts that were trading on the Eurex versus floor contracts and like making money hand over fist. But that arbitrage was simple, went away after a few years. But I'm from Boston. I worked in the Boston financial community for, you know, the mutual fund company, Putnam, Fidelity, you know, invest for the long term, everything will be okay. But, you know, I was always like, you know, what if the long term isn't okay? You know, what if, you know, the dollar loses value? What if inflation continues higher? Just kind of Keynesian's long run. So, you know, I got my MBA, CFA, CMT. I'm a CMT as well. So, you know, I understand you guys trading the wiggles. And then I aligned myself with this guy, John Duty, gold stock analyst, started writing fundamental research on, you know, the gold and silver miners, and joined up with Stansberry Research, and then just went independent last year to bring you guys the truth.
All right. What a mission. All right. So here's, we want the truth about this, Garrett. You know, I've been saying, and I like the miners now. I didn't like them about 4 months ago. I didn't like the fact that, you know, I was taught that the shares should lead the metal, not the other way around. And it just wasn't happening for well over a year. So I say that even precious metal bulls, gold and silver bulls, hate the miners. Everyone hates the miners. Why the disconnect in performance with the miners over the last 12 months with the outstanding performance of gold?
You know, you say precious metal bulls or precious metal, you know, stock bulls. Like,
No, physical. I mean, everyone who loves physical gold says you should own gold.
Yeah.
Even they don't like the gold, the miners. Okay.
Yeah.
You know what I mean? I talk to guys that
I'll
are
tell
in.
you why. I will tell you why, because there's a couple hard truths regarding investing in a mining company. If you do a discounted cash flow of $1 over 10 years, right? You discount it by 5% every year. You know what the value of $1 over 10 years is? And so it's discounted. It's not 10, it's 7.7. So 7.7 is the multiple, right, that a gold miner should get, because they get a mine. Mine is basically 10 years. At the end of year 10, it's a depleted asset. So the miners should be worth seven times 7x free cash flow. They're trading at 6.4x free cash flow, like below terminal value right now. I've never seen a disconnect like this. One of the other hard truths regarding investing in miners is miners are worth the most on day one of production, right? Because, as they mine, they go from 9 years to 8 years to 7 years, the reserves get depleted. So every year that they mine, the value of the equity goes down. That's what you're getting with the mining industry. But once you understand the framework that you are investing in, you can find tremendous opportunities. There's a thing called the Lassonde curve.
Yeah, you want to share your screen? Go ahead. Yeah, Lassonde has the best track record out there for bringing gold companies public and having them be successful.
Yeah.
People, it's like going to the track, you bet on the jockey, right?
Yeah, no doubt. The mining industry is very small up in Canada. They all know each other. Vancouver, Toronto. You need to invest with the good guys that know how to drive value on a per share basis and stay away.
You were just in Vancouver. So how do you survive in a sea of barracudas in Vancouver?
Yeah,
And I see it trying to share your screen. It's at the bottom, Garrett. The green button. Just
yeah.
you move your cursor along the bottom of the screen.
I got it. Share
Yeah.
screen one. Share. Good. You see that?
It's coming up.
Okay.
Yep, got you. The Lassonde
Okay.
curve.
Lassonde curve right here. That second peak is production, right? Miners are worth the most on their day one of production. Then it starts depleting. There's two troughs within the Lassonde curve. Number one, exploration. After these explorers find a high-grade deposit with 1 or 2 drill holes, it takes years to prove out that deposit, and value creation goes along every step of the way. So there's tremendous amount of opportunity in exploration companies, but you need to find the high-grade resources. You need to find, the companies that are going to be able to move it forward. You're basically betting on a lightning strike. But once you find a high-grade resource, it takes years to prove it out. So if you have a portfolio of 10 or 20 of them, a few of them are going to go through the roof. The second trough is after the deposit is defined and they have to go through financing. And right now, there's some companies in this bottom trough that are trading at, one, for example, Montage Gold. It's got this Koné deposit and the CDI. It's got a NAV, the free cash flow over the life of the mine is worth $2 billion at $2,700 gold.
Where's it trading now? Because someone told me about that about a year ago. F.A.C.E, she's a metals guy, a girl, uranium girl. Yeah.
It trades at 500 mil enterprise value. And then on day one of production, EV should match NAV, right? Because, on day one of production, it's worth the most. So EV should rise to reach NAV. Koné is going to be in production in 2027. So every day, it's almost like a discounted cash flow. You take a day off and the value keeps increasing because you're discounting the value less. This is how institutional investors value the equities. There's one that's even better, Rio 2. You get Alex Black, who's a good operator. He founded Rio Alto that got taken over by Tahoe back in the day, that eventually got bought over by Pan American. Massive run-of-the-mill oxide heap leach in Chile. And this thing starts out at 20,000 tons per day. It's going to scale to 80. The valuation at 20,000 tons per day is close to $1 billion. Stock trades at like 170 million EV. And then they don't even need much CapEx. They're going to be in production in 2026. Like this the disconnect between what these companies are worth and what they're trading at. I've never seen an opportunity like this. And that's the weird thing right now is you get gold at $2,700 an ounce. Everyone's like, oh, gold's really high. It's breaking out. The miners must be doing well. They're not. You look at the miners and they're trading at extremely low valuations.
Yeah, they are. In fact, if you let me share my screen for a second, I just want to show you what a rookie I am and, the things that I'm following so that you could tell me what stage that they're on, they're in. Okay, it's going to allow me. Okay, so I'm going to go to here. And I'm going to go to here. All right. So, of course, everyone pays attention to GDX, but here's some individual issues. So you probably don't even look at a Newmont, even though it's putting in a higher low. I mean, it looks like it could be setting up here. But things like this, BTG, which has been a dog, AG, which has gone nowhere, Fortuna, which is still way off its lows, unlike a lot of miners. Endeavor, still off its second higher low, trying to put in a low here. Am I looking at the wrong stuff, Garrett? And I'm going to stop sharing.
Yeah.
I am, aren't I?
Yeah. The deal with the miners, once you get into production, right, you need to continue to increase production. So you issue shares for acquisitions, you spend CapEx. The only thing that matters, the value of every equity, whether it's a tech stock or a gold company or whatever, is the lifetime sum of free cash flows over the life of the asset, right? And you need to drive value on a per share basis. The mining industry, it's very tough to drive value on a per share basis. And can you see my screen?
Yeah, well, you're back up here. Go ahead.
All right, good.
Yeah, I'm looking at stock price follows FCF.
Agnico's done a good job. You can see, the gross profit per share increasing in that yellow line, the stock price follows. The typical miner like Newmont, their free cash per share has decreased from $3 to $1.50. Therefore, their stock price is half what it was back in 2011. Like, it's no secret. Dilution is a cancer of the mining industry, but it's unavoidable. It's just the nature of the beast, So these miners get in production, they add on another mine. These management of the companies, they keep production steady by adding assets, but your earnings per share gets cut in half, over time. So management continues to get paid, bankers get rich, and shareholders
get. I mean, isn't like McEwen turned out to be one of those guys. He's a serial diluter.
Yeah. He's a good promoter. He's
So you know what? I know we've only gone through about half of what we're going to talk about, but I have just decided that I'm an amateur in the miners and that don't do this at home on your own. I mean, you could trade the charts, but how much time and due diligence does it? You must spend a lot of time digging into these different shares, Garrett.
Yeah, I go through the financials all day long, the MD&As and the financial statements. And every once in a while, I find opportunities, I just found this one royalty that trades for, I don't know, 50 mil market cap. They have 25 mil cash in the bank, trades for 25 mil EV. They got 150 properties. I got a couple advancing. It's just, I get excited when I find opportunities like this. But let me show you this chart. Like, if you can see this, when people say silver, a lot of people say, believe like core mining, right? Ever heard of core mining?
Yeah, sure. Coeur d'Alene, yeah.
Yeah, core mining was over $200 split adjusted back in the 90s. Now it trades for, this is an older, trades for 5 or 6. It's down 97%. And the reason why, because their shares outstanding have gone from 10 million to 382 million. It's an absolute cancer, but it's unavoidable.
It's their Federal Reserve, putting out secondaries and how do you know when you're getting ready to see a reverse split. Those happen all the time. That's pretty dangerous too,
well, that's
isn't
the
it?
ironic thing, right? Like people invest in gold and Bitcoin because, you know, people are worried about devaluation and the amount of dollars going up. And so they buy the miners, and the miners, you know, their share count keeps going up faster than, you know, our nation debt.
The M1. Yeah.
Yeah.
All right.
But there are opportunities out there. There are good operators that are able to grow economics on a per share basis. It's hard, but you need to find them. And, you know, that's why I started the Golden Portfolio, you know, to bring people, you know, the companies that can actually do this.
What's minimum investment in your fund?
It's a newsletter, right? So I have
Okay.
three or four different products. People can go to Golden Portfolio and subscribe. Let me tell you one thing. The best way to play gold and the gold and gold shares and mining equities is through the royalty companies. Do you know the royalty companies?
Yes.
You get Franco, you get Wheaton, you get Franco, Wheaton, Royal Gold. There's about 13 or 14 of them that are traded. Royalties can drive free cash flow per share for many reasons because, you know, they only have 3 or 4 employees versus miners have hundreds. Their margins are like 98%, right? Because one of the truths of the mining industry is that when inflation pushes gold higher, mining costs follow. So miners are no more profitable now than they were like 10 years ago. Like miner margins are at 45%, the same as they were back in 2020. Whereas the royalties, they can drive value on a per share basis. The royalties own like 150, 200 properties. All they need are 1 or 2 to get lucky in order to, you know, to drive significant value. Royalties get free exploration upside. Royalties basically rip off the miners because they calculate the price their deals off a NAVDAQ that uses a BMO gold estimate of $1,800 gold in, you know, year 2035. You know, it's absolutely, you know, insane the leverage that the royalties give you. And then there's tremendous consolidation within the sector. All the smaller guys get bought out. But to be honest with you, you know, investing in royalties, it's like watching paint dry, but it's 24 karat gold paint. It takes time to drive value. But if you look at a chart of the royalties, all the royalties have done better than gold. So, you know, over the longer term, you know, the royalties outperform. Whereas if you look at a chart of the miners, the average miner underperforms price of gold. You know, this is crazy. But the thing about the miners, there are certain cycles, there are certain periods, there are certain times when you get tremendous leverage in the miners. And right now is one of those times because the value on a free cash flow basis is the greatest it's been in 20 years. And I don't care whether you hate gold, whether you hate the miners, the value being presented by the miners right now is starting to cause, you know, smart value investors to come into the sector, and then the masses will follow when the stock prices go up, right? Everyone's going to chase the prices.
Are you as bullish silver miners as gold miners?
To be honest with you, I've been covering the silver industry for you know, 15, 20 years. Let me show you one thing regarding silver. Here is a regression right here of silver versus gold. A lot of people like to look at this gold-silver ratio, all right?
Yeah, I do.
Silver trades at a discount to gold like 98% of the time. But when it really gets going, it spikes higher. So you can see a spike in 19. You can see a spike in 2011. There was a small spike in 2020. So like less than 1% of the time, you'll get these massive reversions to the mean. But these reversions, they only last like a day or two. You know what I mean? So your timing has to be absolutely impeccable. I'd rather invest for the other 98, 99% of the time. And then a lot of people get caught up with the silver miners saying they present a tremendous opportunity. And silver is going to explode higher. that leads you down the food chain into some of these bad silver miners that are unprofitable on a quarterly basis, that constantly dilute, that offer tremendous leverage to the silver price. So 1% of the time you're going to be right. The other 99% of the time you're going to be getting.
Yeah, I don't like that ratio. One of our a guy in our community, George, is saying, but in the UK, share prices of UK gold miners rise with gold on a daily basis.
Yeah.
Why would that be? Is that currency?
Why would gold miners rise with gold?
No, UK. In the UK share prices, UK gold miners. So
Yeah.
they must be listed there. Is it a currency reason? The pound up until recently has been weak. Could that be
Uh,
boosting the shares?
Yeah, perhaps. I haven't looked at margins for UK gold miners, but gold's breaking out in all currencies here. And regarding sentiment, like gold's making a new high. It's like $2 or $3 away from an all-time high right here.
Right.
And like no one's talking about it. No one's in the sector. I see you guys trading, the Dixie, versus Euro and stuff like that. And I get it. I've been there. You guys are trading the wiggles. That's fine. I'm more bigger
I don't
picture.
know, George, Garrett, excuse me. A move in euro from 102 to possibly 120 down the road.
Yeah.
A 20% move is not a wiggle.
Yeah.
I
No,
mean, I actually think there's a major position developing and it should be a tailwind for what you do, a weaker dollar.
yeah.
Go ahead.
There's no doubt, but like what we're seeing in inflation right now, like what's the inflation rate been over the past like 3 years? Like what are we paying for eggs? What are we paying for meat?
Yeah.
Like how much has our insurance go up? And
We
I don't
haven't
think,
seen anything yet. Wait, we have high food prices and now the grains are bottoming and they've been in a bear market and we've still had high food
yeah,
prices.
but I don't think the currencies, the movements you're getting, the currencies reflect the actual inflation rate, and that's
Oh,
why
okay.
I'm in gold land, right? Because gold is the canary in the coal mine to dollar devaluation, and that you get the fiat currency indexes trading against each other, they're trading against a dollar that has no inherent net worth.
Right.
So, I'm in a different place, but I totally
No,
understand.
I understand,
Yeah.
the fun, but making money is the same. Million ways to skin a cat. And don't you think the gold's getting overdone here? I know a lot of guys that think we're in like a 5 to complete this move that we've had for last year. And what do you do if, say, we get a correction in gold from wherever the high comes in back to 2,400?
Let me
What would
show
that
you.
do?
You guys see my screen right here?
Yeah,
The SPY ETF in gold right here in 2011. There are more assets in the GLD than there were in the SPY back in 2011. They're traded at 1.1 or a little bit over 1.1 ratio at the last peak in 2011. Do you know what the
yeah.
ratio is now? It's 12%. There's
Wow.
12% of the S&P assets are in the GLD ETFs. At the last peak, there were more assets in gold than there were in the SPY. Like this is where I'm at. Like this is the
Yeah,
beginning of the move. This isn't even close to the ending of the move. Like the moves always end up in a parabolic phase where everyone's freaking about a loss of purchase power, loss and all that. We are so far away from that right now. And then here's another one, the GLD ETF. This blue line shares outstanding, right? Which measures like market cap because it's equal
yeah,
to a tenth of an ounce of gold. So the ounces, the shares outstanding represented ounces held was at like 440 million shares out at the peak in 2020. This isn't even
yeah,
2011, and
yeah.
now they're down. There's no assets coming into the GLD, and you can look at it on the GDX as well. There's no assets coming into the GDX right here. This is the beginning of the move. We're so far away from like the end run, like people have
Right.
no concept.
Okay, that's a great point. So there could be a time where the miners are doing well and maybe physical's not doing as well. How about that? Is that possible?
I see gold doing well, and I see gold driving value into the miners. And like I said, I see the value guys starting to sniff around, and I believe the other institutional investors and people will come when the returns are there. Do you know what I mean? Like when people,
they buy it because it's going higher.
exactly.
Let me ask you this, if you're willing to share. How about 2 or 3 of your strongest convictions, gold shares in your fund?
Yeah.
You don't
Well,
want to do it, I could tell by your tone of voice.
I got
How
a lot.
about how,
Just like
how about how about one?
no, that's fine. I don't mind disclosing picks, but just the undervaluation we're seeing right here. Like
You could throw a dart. You
you're
could
picking
throw a
up
dart.
you're picking up dimes for you're picking up dollars for dimes. You know what I mean?
Okay.
It's just absolutely amazing. Rio 2, you're spending whatever 200 mil for at least $1 billion ounce NAV. That's gonna scale 4x. That no one is
What's a
involved.
symbol for Rio 2?
Rio 2, RIOFF.
Where's that traded?
It's trading in Canada, and they got a pink sheet listed in the US.
Oh, pink sheet. Wow.
Well, the volume's a lot of the companies I cover are pink sheets. Yeah.
Wow. Okay.
Yeah.
Man, to me, that's like altcoins. I'm just saying. I mean,
Well,
that you really have to know what you're doing. There's good
re-
liquidity and volume in
yeah, yeah, yeah.
these things.
Yeah,
Yeah.
yeah. Rio, I track it in US and I track it in Canada, make sure the volume's there. But yeah, with the pink sheets, you really got to know what you're doing. And I tear through the financial statements to make sure that I can find value and that it's like really value that's there. But regarding the crypto tokens, like back in the day, the gold explorers, right, used to fly like crypto tokens. Like
Yeah,
we're gonna
Briax.
Yeah. Like we're gonna have a time in the near future where these gold explorers are gonna fly again. Like I see, the gold explorers are gonna, take off like crypto tokens. Let me share one thing regarding Bitcoin. This is kind of interesting.
Okay,
Um,
so before you do, explorers are the stage that you're looking at. I've been told by a guy who's real good, used to be a
yeah.
mining analyst too. You don't want to be in miners when they're building the mine.
Once they're fully financed, the Lassonde curve, once they're fully financed, you're at the top of the Lassonde curve. When they're building the mine, you're de-risking the asset, right? And then the EV rises to match NAV at time of first production. And then when production happens, that's when the trouble starts, right? You look at Mali that just, took $250 million of gold from Barrick. You get heap leach failures, at Ascot and Victoria. It's just bad things happen. And the build phase is where the asset is de-risked, and that's where the value is created. I to be honest with you, I like the build phase, and that's what the Lassonde curve tells me. But I like the developers. I like a few explorers. I like the developers, the ones that have a defined reserve, the ones that have a mine plan, economic study, the ones that are like 1 or 2 years away from production.
Okay, go ahead with your Bitcoin thesis.
Yeah,
I know
the
you're bearish.
Bitcoin thing. So, I to be honest with you, I bought Bitcoin at $10 back in the day. I remember reading Satoshi's white paper. I'm like, holy shit, this is it. It's digital gold. I ended up selling at 200, and I thought I was a genius, right? And that's the thing about the way that I trade. It's like hang on to your winners, right, and cut your losers. Just you get winners, just hang on to them and ride it. But this book right here, can you guys see this? It's Jason Lowry. It's called Soft War.
Yeah.
Yeah, he wrote this book in 2023. He was a younger guy. He went to MIT, brilliant dude. He started going hard on Twitter about how, if you start a Bitcoin reserve, this is how war is going to be fought over the next generation. And then all of a sudden he went dark. He ghosted on Twitter 2 years ago because the government started picking it up, and the CIA, and he's in the Space Force. They told him, to calm it down. And the policy started to move behind the scenes of the US government. This book is out of it's out of print, you know. Hardcover costs like $4,000, you know. This guy's been dark for like 3 years, and now we're getting to the point where the US is going to have a Bitcoin reserve, right? But and everyone knows it. Like that's all everyone's been talking about for the past like month, and now it's, you know, coming to reality. But this is not the time to buy an asset. The time to buy an asset was when Bitcoin was at 10,000 before any news, right? Now it's like buy the rumor, sell the news. Now everyone's, you know, buying the news, and Bitcoin always goes through corrections of 80, 90%. Freaking MicroStrategy is going to blow up like the biggest Enron you've ever seen when Bitcoin corrects. And then, you know, you might want to get involved with it then. But, you know, and gold represents the exact opposite. Gold's going all-time new highs. No one cares.
What a great interview. I'm so glad you granted the interview, Garrett. Really a pleasure to meet you and hear your ideas. And, you know, I've been doing this long enough to know after I talk to someone for 5 minutes if they know what they know.
Yeah, exactly.
Yeah, so, you know, hope to have you back. Best place for people to subscribe, get a hold of you, follow you, subscribe.
Go to my website, goldenportfolio.com. I have a free Secrets of a Mining Analyst Masterclass. Sign up there and learn more about my products.
All right, and follow Garrett on X at his name, at Garrett Goggin. And you know what? You are now, after 30 minutes later, my trading warrior brother.
There you go. I'm with you.
All right. All right. So really nice meeting you, man. I hope this is your, what I'm telling people is let's have a good decade this year.
I know, right?
And what you're talking about, you know, could be it.
Let me say one more thing. What I see coming with Trump and Scott Bessent, Trump keeps saying we need lower rates. Bessent, the Treasury Secretary, needs lower rates. Our whole debt structure is financed on the short end. He wants to move it to the long end. They need lower rates in order to accomplish that. And then yesterday, you know, the Trump's like, you know, do you think Powell will listen to it? And he's like, yeah, I think he will. And Scott Bessent, you know, has expressed the need for a shadow Fed governor to represent the Treasury's interests. And Trump is blowing up the CIA and FBI and all this stuff.
Everything.
And he's going to blow up the Fed too. The Fed's going to lose its independence. I believe that the Treasury and the Fed, they're going to launch QE5, and it's going to represent yield curve control, right? Where you're going to have the Fed buying all the Treasury's debt sales. China's going to, all the foreign investors are going to go away. It's straight out debt monetization. We're going to have lower rates. But like I said, gold's the canary in the coal mine for monetary devalue, and gold's going to skyrocket once this QE5 gets announced. And with Trump, all he cares about is making money. As long as people are making money, then everyone's happy, right? He doesn't even care about the, you know, trading Trump coins and stuff. But the thing is, you know, everyone's going to be making money, but a bottle of Coke's going to be $20 in 3 years.
Yeah, I know what you mean. So you have to make money. I'm telling people, tell me what you think about the days of being long the spider and being on the golf course for 3 years are over.
Yeah. Well, the news flow is amazing for traders. It's probably the most fun that we've had in years.
You can't be passive. It's going to be a great trading 4 years with
tremendous opportunity
with a mercurial capitalist. Mercurial capitalist. Anyway, Garrett, great, really pleasure meeting you. Go ahead. You want to wrap it?
Nice meeting you too.
All right, I'll get a hold of you. We'll talk in the spring. Things should be cooking by then.
Will do. See you then.
Garrett Goggin, everyone, follow him on X at his name. Check out his newsletter. You know, they are cheap. They are cheap. That's when you buy, when everyone hates them. Everyone hates them. Thank you very much, Garrett. And everyone have a great weekend. Good, you know, do your work, get ready for next week, and don't just count your pips, count your blessings. Everyone enjoyed it, Garrett. I think you'll get some action. So that's a wrap, everyone. Adios. Thanks again, Garrett. You join the team in 12 minutes on the Morning Edge.